Good afternoon. From before the See Me, this is Chris Robinson with your Trader's Exclusive comment. Today, the 13th day of September, one day post USDA report. Bottom line, it was a very bearish USDA report for the grains. A lot of people were caught the wrong way heading into that report. Most people thought that they were going to lower yields in corn. They did not. They increased the yields to an average across the country yield of 181.3. That pencils out to almost a 15 billion bushel crop, 14.827. The market was not expecting that. You had a pretty good move lower in new crop December corn. Got down to within a quarter cent or a half cent of the contract low, which is where we're sitting now. A lot of people are concerned that there's another leg lower to go in corn. So that was bearish. We did get very bearish reports in soybeans as well. They increased the soybean yield to an average of 52.8 bushels across the country. That translates to a 4.693 billion bushel crop. Where does that put us? Well, we went out and made a new contract low at 820, 821, and then we turned around and rallied. A lot of people sold that report across the board and got hammered. Soybeans rallied 20 cents. That is a perfect example of why it's so difficult to day trade USDA reports, and especially if you day trade off of headlines, or emotions. A lot of people, you might have gotten short corn and wheat and made money there, but you lost money tremendously. From the bottom to the top was about 20 cents. That's $1,000 on a one lot. So if you weren't careful, if you weren't disciplined, you were looking at pretty severe losses, especially if you were making an emotional decision, selling in that low down there. Now, the market's continuing to digest what's going on. There's some stories that there's going to be more meetings, obviously, with China. If that comes through and we were to get a deal, we'd be off to the races. Why? China still needs our beans, and we're at 10-year lows. Pull up a chart of the weekly nearest chart in soybeans. We're at 10-year lows. So this could be an opportunity for end users. It's certainly an opportunity for China if they ever step back in and buy it, because they're buying beans. You got to remember, early this year, beans were at 10.40, 10.50 a bushel. You know, we're at 8.20. That's a tremendous buying opportunity if you need to own beans. And if you've got the type of demand that the Chinese have, they need our beans. And we'll see moving forward. Is this enough of a temptation for them to actually come to the table and cut a deal? That's my take on what happened in the USDA. There's obviously a lot more to talk about. If you're looking for help with your hedging or you're speculating, look me up online, Chris Robinson. You can find me at the Robinson Review. Have a great day.